Welcome back. I'm Pratap here. In this video, let us evaluate the performance of high liquidity zones generated on 7th January 2025 end of the day report. And these zones performance we will evaluate what happened on 8th January 2025 live market. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons can be accessible at our NeoStock YouTube channel. At our channel homepage, please click on the tab Community. Some of you might be seeing the tab Posts. Click on the tab. You get access to our free training course. And you might be knowing the cost of the training is over 8,000 US dollars, and it is a complete free training. And in this post, you have a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the supply demand zone price action course playlist. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons and strengthen your skills related to supply demand zone price action. And this training program will ensure you will become an independent trader. I also provided our Telegram channel link in this video description. So please join at our Telegram channel. It will be helpful to you. Now let's get into the analysis discussion. So on 7th end of the day, we identified 1, 2, 3, 4, 5, 6, 7 high liquidity zones from daily and 75 minutes time frame. And the first one is Sun Pharma. Sun Pharmaceutical, we have a daily high liquidity zone, rally, 3 base candles and a rally candle. And this one we fine tuned with 15 minutes time frame. So I consider this as this leg-in is a like failed ERC as a rally, as a leg-in, and you have 3 base candles and a rally candle. And this 75 minute zone again fine tuned with 15 minutes time frame. Here in the 15 minutes time frame, you have a rally candle as a leg-in. You have 1, 2, 3, 4, 5, 6 base candle and a rally and follow through candles. And within this 15 minutes, again fine tuned with 15 minutes time, 5 minutes time frame. Here you have a drop base rally. And this is on 6th January at 11:50 candle is the leg-in. And this is the area today prices entered and reached almost up to the 15 minutes target zone. So this is the entry. At morning, today means 8th, because I am recording one day late. So 8th January at 13:35 it gave the entry, and after few candles it reached almost close to the 15 minutes target zone it reached. So how much profit it has given? It has given 5,635 rupees profit, which is 5% ROI as per one futures margin cost. So this is about Sun Pharma. Next one is AU Bank. AU Bank is a daily high liquidity supply zone. We have a rally candle. We have 1, 2, 3, 4 base candles and drop candle. And today's price did not reach into the zone. We did not get a trade. Next one is IndusInd Bank. This is again drop, 2 base candles and a drop candle. See, always you can see the timestamp. Thursday 14th November, drop. And this also did not enter into the zone. These are all the daily charts. Daily candles did not enter. Next one is Alchem. Here we have a fine-tuned 5-minute zone tested multiple times. This is a 75 minutes time frame zone. Today prices entered into the zone in this candle. This is the first 75 minutes candle. But did not reach this fine-tuned 5-minute zone. If this is a high liquidity zone, if it is acting, even if you feel, because already tested multiple times, if you feel you want to take a trade, you can plan, nothing wrong. The risk is within your management. But have you noticed in these candles? Exactly this candle low level, this candle is also started, this is also started. That means in this area we might be having some high liquidity zone. So if you go to the 5 minutes time frame, 5 minutes you have on Jan 25th at 14:35 candle, we have a leg in, base and rally. See, this is already tested once today and again tested second time today. Maybe this is acting as a high liquidity. Maybe next time we can plan a trade in this area. But today we missed this trade because this is not the fine-tuned zone. If this is the fine-tuned, we would have taken a trade. But that didn't happen. So that is the reason why. And you have to plan this as an aggressive trade, but we don't have any price action clues to plan this trade. That's why no trade plan in this area. Otherwise, it has given a very good profit. But bad luck, we don't have a proper price action clues to plan anything. Generally, one time these zones will, rarely these zones also will be tested. Order flow might be strong. But after multiple tests, see, first time, second time, again this candle, third time, multiple times when it is tested, then we are realizing maybe this could be high liquidity. Maybe. I'm using the word maybe. Why? Because maybe these kind of zones, without the help of software, based on multi-testing, if you are assuming, the chances could be only 70 to 80% to act as high liquidity. Sometimes it may be violated next time. That possibility is also there. That's why those who are accepting the risk within our limit, nothing wrong in planning a trade. If it is violated, fine. Okay, small money you will be losing. If it is tested, you get a good profit. So this is about Alchem. Next one is Kalyani Solaris. Kalyani Solaris is a daily zone. This is a leg-in candle, 28th November 9:15. After that, we have 1, 2, 3, 4 base candles and a rally candle. This is how our software identified. And this is having a fine-tuned 15 minutes and 5 minute zones. Look into the fine-tuned 15 minutes zone. This is a drop. You have 1, 2, 3 base candles and a rally candle. This is how I have drawn. But have you noticed this 15 minute zone is having a fine-tuned 5 minute zone. And this zone is already tested once here. Again, second time also it is tested. Again, drop base rally it is forming. Maybe this is the area we might be having a strong institutional order flow. Maybe it is working as a high liquidity zone. That is the case. Even though it is a tested zone, there is nothing wrong in planning one more trade in this zone. But how we have identified fine-tuned 5 minute zone? Go to the 5 minutes time frame. See here, you have a very big candle as a leg-in candle, and then you have a base candle, you have a rally candle. When is the leg-in? The leg-in is on 28th November 13:25 here. See, the 5 minute zone is tested first time. Here again, 5 minute zone is tested second time. If it is a high liquidity, nothing wrong in planning a trade. But is price entered into the zone? See here, in this candle, it entered into the zone, the 5 minute zone. Today market, today means 8th January. I'm talking about. I'm recording one day late. Price is entered, and our next 5 minutes candle, the zone is violated. But then what happened? This is stopped out, right? Okay, maybe it is a high liquidity. Already tested 2 times, fine. But it is stopped out, right? No. The answer is no. It reached 1:3 RR. How? The candle entered in the one zone, next zone this is violated. How it reached? Within the same candle, 5 minutes candle, it gave an entry. Next, it reached the next 1 minute candle. After it touched the next minute, it reached the target, and after that it is violated. You get clarity only if you look into 1 minute time frame. Go to 1 minute time frame. See, this is the 1 minute candle, and when this 1 minute, Wednesday 8th January 2025 at 9:17 candle, it entered into the zone, the fine-tuned 5 minutes area, which is acting as a high liquidity zone. It gave an entry. After that, see the sharp rejection, and after that opened with gap down, and again prices moved further up and achieved 1:3 RR. See here, RR is 1:3.09. Of course, a little above it went, beyond, until high to maybe 1:3.15 or something it gave. But we are Okay, up to 1:3 RR. And then prices came down, closed in the next candle again, and then it is pierced, and finally the zone is violated. But in 2 minutes, it gave you very good profit. Just 2 minutes. Those who took the trade, lucky, it's a very lucky trade, because 1:3 RR achieved in just 2 minutes. First minute you got the trade, second minute it reached the 1:3 RR. Of course, it is failed to reach 15 minutes target. But we consider 1:3 RR trades are successful, minimum 1:3 RR. So that way it is a successful trade. And in 2 minutes, it has given 6,355 rupees profit in just 2 minutes. And ROI is 4.7% in 2 minutes. And one futures margin cost. So this is about Kalyani Zolers, and next one is Sriram Finance. Sriram Finance is a 75-minute zone. We have a leg in 3 base candles and a rally candle identified by software. This is having a fine-tuned 5-minute zone, but unfortunately this is violated. This zone is violated. So this is the 15-minute zone. Rally, 1, 2, 3, 4 base candles and a rally and follow through candles. Next you have a fine-tuned zone here, you see. You have a drop candle at January 25th, 1st January 25th, 2025, not 25th, 1st January 2025, 15 hours, leg in. After that, 2 base candles, rally candle. You may ask a question. Again, can we consider rally, base, rally here? You may consider. But you can't use this, because see here, if you are using, the stop buffer comes almost close to this zone. You can't combine both these zones to manage the risk. See, this itself is 1% risk, the drop base rally itself. If you combine, you will be getting a risk beyond 2%, maybe close to 3% risk you will get, which is not acceptable. Previously also I told you these techniques, when LOTL zones are there, intraday trades point of view, mostly you have to prefer lower trades, risk is within, then you have to combine both the zones. So that way this is the ideal scenario where you should plan, but see here, this entire zone is violated. So this is the stopped out trade. So loss as per one futures lot size is 1,045 rupees. ROI is minus 0.6%. I think this is minus 1%. I didn't update, sorry, this is I think minus 1% is the open Excel sheet. Minus 1%. And the loss is 900 rupees. I think this is, sorry, I didn't update. Minus 900 and this is minus 1%. Okay. Sorry for not updating this slide. At least I have remembered this is minus 1% is the last. Okay. So Sriram Finance has given 900 rupees loss, which is a 1% negative ROI. And next one is Sonacoms. Sonacoms, already we discussed this daily, this 75 minutes HLQ zone, because the last trading session also, we got the profits from this zone. Here, this fine-tuned zone. But this is a tested zone. While going up, before reaching this 15 minutes target, it has created a new 15-minute zone. It is having a fine-tuned 5-minute zone, and that is also tested and then moved up. And both are tested zones, because they are tested fine-tuned 5 minutes. They are easily violated today. That is the reason why we don't trade on the tested fine-tuned zones unless they are high liquidity zones. So Sonacoms is expected that this zone will be violated. So because you already learned when a zone will be violated in our lesson 16. As per those concepts, this zone is violated today. And we already know this is going to be violated. So this is about the high liquidity zones identified in the previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.